Perfect. Good afternoon, everyone. Thank you so much for joining us for How to Sell Your Business. My name is Tegan McKim. I'm with SCORE Palm Beach County. Thank you all for joining us. We've got a great webinar, as I've said already. We've got a great webinar for you today. I do see familiar faces. I even see a couple of our SCORE volunteers, so thanks for joining. But if this is your first time joining one of our webinars, a little bit about SCORE before I turn it over to Bill. SCORE is a nonprofit. We're a resource partner of the Small Business Administration. And our goal in everything really is to be able to give people every tool they need to take their business from the start all the way to the end, as we'll see today. So every step of the way to help you start your business, grow your business, and ultimately come up with an exit plan so that you can sell your business successfully. So if you have a mentor, that's wonderful. Let us know who your mentor is in the chat. If you don't have a mentor, but after this are interested in getting one-on-one help with exit planning or something else related to your business, feel free to reach out to me. We'll also have the presenter's contact information as well if you have questions for them. So thank you so much everyone for being here. I'm going to go ahead and turn it over to Bill West. Bill, thank you so much for being here.
Thank you, Tegan. Well, good afternoon, everyone. Bill West. I am with West Advisory, the founder of West Advisory. We're an economic development, capital access, and exit planning firm. Within that practice, I also I sell businesses. So I am with Acquisition Experts as a business broker. I'm a Florida licensed real estate agent. You have to be able to sell businesses, but I specifically I am a small business expert, as you'll kind of, I get to introduce Ryan here in a second, but I have a 30+ year career in commercial lending. Is my background, working with small businesses, starting small businesses, working with them through the ups and the downs, and every single cycle I've seen and experienced and celebrated and cried at times, but I know what it's like to be a business owner. I've been a business owner, been in a lot of different businesses, a lot of different roles, and just I have a passion for working with small businesses. Very early, well, not very early in my career, kind of later in my career, but very early, I think, in his career, I met Ryan. So Ryan Coughlin is with Capital One Bank. He's joining us here today, and I'll let him fill in on his background, but he has been a commercial lender for at least the 20 years that I've known him. I kind of stayed in the same place and grew up and matured in the same place. And I watched him move on to run some pretty big operations in some pretty well-established cities. So Ryan, why don't you tell us a little more about your background?
Yeah, thank you for that, Bill. And I've known Bill for, like you said, about 20 years now. I'm in my 20th year of banking right now. This is my 20th year. So it's been a wild ride, to say the least. I think I've shared some of those tears with Bill along the way. So it's been a lot of fun. But yeah, guys, I am the Senior Vice President, Senior Director for the Business Banking Division for the state of Florida. So I have bankers all over the state. We work with small businesses, small business owners. We help them, go from beginning life stages to their exit. And we also manage them along the way throughout their banking life cycle. So, we do all things from the deposits to lending to treasury management solutions, all things to help a business run very well. And I think we'll be able to talk to you through how we can help you with your businesses today and help things move, what we look for to help you get your business to the next step in its life cycle. So thank you for that, Bill. And I'm looking forward to hearing more today and joining you today.
Excellent. Thank you, Ryan. It's great to do this with you. So the slides worked in our practice section. There we go. All right. I guess that's where this is the slide we were supposed to be on. All right. So a little bit about businesses. So this is, again, it's how to sell your business. So we want to talk to you. Tegan talked about startups, right? So selling your business, on the other side of selling your business, there is a younger entrepreneur wanting to purchase it and wanting to be an entrepreneur. So I want to keep us that in perspective. It's really a full cycle, and that's what we're talking about today. Is it's that transition of a business to new owners, and how do you go about that as a business owner or as a counselor to business owners. So the business market, the small business market. I have the market segments here. So there's a Main Street segment is one of the segments that they say, and a lower middle market. I'd really divide up the Main Street and the middle market a little bit differently. I'd use, as Ryan will describe, a lot of times we use SBA lending to finance these business acquisitions. And SBA, it's a, it's that 500,000 to the $5 million range is really the Main Street market now. A lot of similarities in there. It crosses over into the middle market because you do get bigger companies that if you're in that $5 million range, $3 million range, $5 million range, bigger companies may be looking at you to acquire you for a regional presence or something. So there's definitely a little lower middle market. There's crossover between all of them, but the similarities are, like I said, I think there's more between the 500,000 and the 5 million, or at least certainly between the million and the 5 million. So breaking it down a little bit, Main Street businesses by sales by industry, and these are just the numbers of sales. So you can see most common is restaurants. This is Main Street businesses again. So as they defined it, it was below $1 million. So as you would expect, it's the Main Street, right? It's what you see on the, it's the retail shops, the business services, personal services, restaurants, things that don't require a lot of capital to get them up and running. So that's so they're in that Main Street area. You move across manufacturing. Sometimes they're in that Main Street. There's some smaller manufacturing, smaller distribution that happens in there. But then you move along and these kind of disappear as you require more capital, the harder it is to stay in that below $1 million kind of category. So then you move up into the lower middle market, like they're saying, so that this is I think they define it 2 million to 10. So this is, it's heavier, right? So it's things that require capital equipment, capital improvements. They require buildings, equipment, construction, engineering, manufacturing requires a building and equipment. And then it kind of dwindles down into, there are some bigger ones that don't require as much capital on the infrastructure, but they still they have great value and sell their wholesale distribution. So a lot of this is really my space that I kind of play in, is it's the manufacturing, the wholesale distribution, those types of businesses where I am the most at home. Sorry, this one's a little fuzzy. Why deals don't close? I thought this would be important to business sellers and to their counselors, right? So I will read it to you. The top one is unrealistic seller value expectations, 23%. Economic uncertainties at 17%. Let's stop at unrealistic seller value. Well, actually, we don't need to stop too much there because we're going to dig into it in a second. But getting the proper value, if you price, a good point to get across here, if you price your business properly in this market, the market has been terrific. SBA lending's available. There are good buyers trying to come to Florida. If you price it properly, it will sell. If you don't price it properly, just like anything else, it may not sell. So that is a critical item and something you don't want to get wrong. Economic uncertainty is, you can't predict that. That just is what it is. Poor financials is a big topic for me, and we're going to drill into that in the next slide. But that's a big one. Ryan will tell you it's really difficult to overcome. Poor financials. Financing is obviously something that comes up here. Unrealistic buyer value expectation. For some reason, the buyers don't tend to. I think that they're just, they're going to pick, and they're not going to go after something that doesn't match them. So they're naturally going to disappear. Deal fatigue definitely happens. Deal fatigue, time kills deals, is what people say. So it's any amount of time. So the faster, the more. When you're in a transaction, when you're on to sell, be determined. Don't be hesitant. Make sure you know your path and move along that path. Make sure others are all on that same page with you with that path, because deal fatigue is definitely people get tired and people quit. So drill in a little bit more with the why they don't close by deal size, right? So again, the smaller businesses frequently don't have the best financials. That's even in the space that I'm in with these smaller manufacturers and stuff. It's a guy who kind of grew up in the business, or a lady who kind of grew up in the business, and it's something that they've had to figure out how to do. It's part of their, it's not something they've ever been trained on. They're not a finance professional. They've had to figure out how to do the finances for the businesses. And the outcome is, if you even have anybody like that there, hopefully you do. But the outcome, if you don't have anybody like that, is poor financials, And then that I think equates into kind of the financing issues, unrealistic seller expectations. We kind of so this goes up by deal size, right? So financing becomes more of an issue. There's more cash deals in the smaller deals. Financing becomes an issue once you get over that 500,000 into that $2 million range. You want to pitch in anywhere here, Ryan? I'm kind of
No, I
moving
mean,
along here.
I think you're spot on. I think, something that you want to see here. So as you're reading through this, right? A lot of this comes down to financials, financing, what are the expectations, right? So make sure that you have a solid partner in your corner. What I mean by that is someone like a Bill West or someone like when your banking partner, make sure it's not just a transaction, that they truly are being advisors to you, so they can kind of walk you through how can you get to where you need to be able to achieve your goals of either acquisition or exit or moving to the next step in the stage or maximizing cash flow, because these things are very, very important. And we'll get a little more granular in this as we get into my piece, and I can get a little more granular into how we can overcome some of these things and achieve the goals that you're looking to achieve.
Excellent. Okay, reasons for selling by market. Retirement. If I cannot see the bottom of my screen where it says, but I am quite certain that the bottom of that is the 58%. The blue is retirement. Fatigue or something like that is the next item, but by far, oh, there it is up top. I'm looking at the bottom. So retirement is in the blue. Burnout is the next. And you can see this is by deal size, but across the board, retirement is the primary reason why people sell today. It is the silver tsunami. This is where I told Teagan I'd like to speak to the SCORE counselors that are on the call here, especially is you see business owners that go to retirement, and they're going to retire, but they don't really do the planning that they need to do. Frequently I get a call, I'll talk to somebody, they might take 2 or 3 years. It really, I think it kind of matches this graph, is that how many of them take me up on, hey, we should be doing some planning here, right? If we're 2 years, 3 years out, it's probably 2% of them that take me up on that, right? Most people just, they kind of go down the road. You're busy with your business, right? You've got a lot to do, and you're on track with your business. It's something that's going to come up on me. It's something I need to do. It's something I'm not an expert in, but it's going to come up on me eventually. The more time that you can put into planning, the more, and a trick to put more time into planning and to putting more into everything else and to get more value out of your business is to remove yourself from the day-to-day operations of the business. But the more that you can take yourself out of the day-to-day, put yourself into planning, the better value you're going to get out of your business. And I think you can see that down on the far end of the chart, where the bigger businesses are really the ones that they do emphasize the planning on the sale. Pricing. All right, Ryan's going to recognize where this came from. So this is back to my banking roots. So pricing and selling your business, right? So getting the price right is absolutely critical. I put a lot of time into that upfront, so that the sellers do know what the value is. So this is a valuation report, and I'll kind of take you through how I go about doing it. So I have, it's a spreadsheet based template that I've created. Like I said, Ryan will recognize it. It comes out, this is the output sheet. So it kind of gives you the calculation, which is the end result. So I go through some work to get there. But so this is the last 3 years of tax returns. In banking, we call them spreading the tax returns. When you're in the business brokerage, it's a dirty word in banking. It's recasting is what we call it in business brokerage. Spreading them is what you would do in financials. So this is actually off of their tax returns. I take this input, just getting this information in this format, it gives you a lot of knowledge about your business. You can see trends. That's why Ryan and I love these, right? So we can look at this and we can go, okay, this is in good shape. Hey, what's going on here? What's there's this is the welding supply business. This one, if I put in the 2022, I've updated this one since this. So his 2022 tax returns came in, And I looked at them, and his cost of goods had spiked by like 300. All of a sudden his cost of goods were 900 something $1,000. Right. And he still had a pretty good profit year, but I could, with that trend, with putting him in there, and Ryan would have done the same thing. You go, what's wrong here? What happened? Right. To have a discussion with him. Hey, this is what happened. We find he made an error in filing his tax returns. Right. So, and it's leaving money on the table for him at his sale. So if he puts this in the right place, he bought a bunch of equipment for this business that should have been, it is being retained in the business for lease to customers, and he accidentally marked it as it was being sold. So it triggered, it's in the wrong space, and it was going to take away from the value of his business. Putting it in this format lets you see those kind of things, and you can see if something is askew. So I go down, I take that information. I try to do as little adjustments as possible to this. When you're in banking, you get on the other side of that and you're like, what are these adjustments? There's people trying to make crazy adjustments to build value into business. I take the real things and I make adjustments for them. So you can see in here, officers' compensation. That's going to be something that's an owner benefit. It goes along with the net income. Bad debt, I'll make a decision on it. Is it recurring, not recurring, whether or not to put it in there. And then I adjust the rent to market. If there's others, a lot of times people have pensions and profit sharings and stuff that are really legit expenses that I'll make an adjustment for in there that you can add back. All of that comes through, and then I get the recast, like I said. So these, so once you have the recast, so this is the original numbers minus or plus the numbers that I just showed you for the adjustments, and you come out with a new spreadsheet on their finances. So I've got their earnings before interest, taxes, depreciation, their EBITDA, and seller discretionary earnings down here, easily visible, very, very profitable business. Somebody can look at this, see the profits in the business. I do the balance sheet too. I mean, they leave it in here. I mean, this is a really neat business, and there's a lot of businesses like this out there. I do a little forecast for them. This is really not rocket science in my forecasting, but it gives them kind of a, an eyeball on going forward. Some common size things. So this helps you compare in banking. If you compare yourself to a peer in industry, benchmarking, right? Everybody's sort of benchmarking. You use these as benchmarks. So you're looking at the industry. You can take your numbers, you can compare it to the industry numbers. You can go, oh wow, I'm paying way too much in rent compared to my peers. What are they doing differently? And why? It might be a reason for it. I might be doing something. It might be a strategy, might not. But when you do these common size, it's really useful information. Looks boring, it's useful. So I take that information, the seller's discretionary earnings that you saw before is kind of coming across this line with the forecast. And behind this machine is, so peer comps it's a SBA. Whenever there's an SBA loan done, whenever Ryan does an SBA loan, it's reported back to SBA. Their finances reported back, the amount of loans reported back. So all of that information is sitting in a database that's anonymous. Peer comps mines that database, and I use that information to create this report. So I've got really good scientific information on, I can drill into by NAICS code. So that's the industry classification. So like this is a industrial supply company. So I drilled into the industrial supply companies, about his size, performing about the same way, and came up with, that this is the factor that we should be using as our multiple for seller discretionary earnings 3 times. I'll show you some of that stuff again in a second. So 3.18 times that, and then it's coming up with the value, right? So that is really the valuation piece of it. And when you value, so Ryan will actually, there's two, this is just a cursory valuation. The bank is going to perform an actual valuation. Ryan may touch on some of that during his presentation.
I will, Bill. I will.
Perfect. Okay. So just, this is market sentiment, right? So it has been the best sellers market, the only sellers market I've ever really seen, and a very dynamic sellers market in businesses. If it barely might have gotten to a seller's market at other times, but it's really over the last few years, it has been the right time to sell your business. you can see in the fourth quarter of 2022 where market sentiment kind of falls off. So I don't know exactly where we're going from here. I do, you know, banks are being cautious. They're absolutely, you have to step carefully at times like this. You know, we saw the economic uncertainty in our earlier slide. You really have to tread cautiously here. People are being slower to make decisions. Everybody's treading, you know, I think over the last few years, somehow it was a little bit like the real estate market. It really got ahead of itself, and some of that's going to come back to haunt us, unfortunately. But I won't make you answer to that, Ryan. We'll keep on moving. All right, so deal size. So this is where I was saying that one was at 3.2. So this is by deal size, the multiples by the deal size over time, right? So you can see over time that the smaller deals, those under $500,000, it's pretty much a 2 multiple, right? Interest rates aren't going to change it. It's a cash deal. You get up a little bit higher. I don't know what happened in 2021 that moved. It really probably shouldn't have moved, you know, in that price range. Interest rates are affected a bit, but even now with prime going up and stuff, people are, if you're determined to own a business, it's still a great deal. You know, this is not abnormal times for interest rates. It's something you should be expecting to be in your business plan, that, you know, even if rates were low, you should be stressing your company for those kind of rates. So I would not be fearful of those rates across the spectrum if it's a business that can be successful. Again, in the you start get up, you get a little more financing. Probably is could be some of that affecting the multiple there. Once you get above that, then you can definitely see at the top of the range, you can really see the effect of interest rates on the multiples and on the values of the businesses. So it would, and if you think about it, it's going to push some of those bigger deals into some of the smaller ranges if the multiples decrease like that. Blind listing. So how do you advertise? One of the difficulties with selling a business is keeping it confidential, right? So it's really difficult, especially in this information age, to keep things confidential. I'll you know, I mask things. I'll put them in a different county or something, and, you know, or tweak something to, you know, I'm very anonymous, and it's still, you can a little bit of study, and you can figure things out pretty easily. I do it to other brokers all the time with their, you know, it's a generator company that's this many years old. You can kind of go and figure out exactly who the generator company is, but you try to keep it confidential. This is the listing. So you can, as a business owner, there's BizBuySell. There's a few different websites that you can list on. Florida Business Brokers that I'm a member of, we have our own multiple listing service. It's like a real estate multiple listing service, but it's specifically for businesses. It's set up for businesses. You know, sometimes residential realtors will list there. You can list a business on a residential MLS, but it's typically those very small Main Street kind of businesses, the restaurants, those kind of things. It's not set up to do, you know, you can get a good quick look at this and go, I want to learn more about this business, or I don't, right? So that's the way this is established, and I'll show you a little closer. So again, this is on that same welding company, how we've got them listed. So it's you know, it's generic. It's enough to interest somebody. Very clean books on old-fashioned systems. I mean, that is the opportunity for these young buyers. I mean, they come in, they put everything up in the cloud. They make things more efficient. They know how to do things with marketing, and they just put a little polish on a neat business. And it's fun to watch. It's the great part about this. But I mean, you watch a seller get to walk away and go retire, and you get a buyer. You get it's a younger family or whatever coming in. They're excited about the business, and you get to watch the business grow. So that it's really a cool place to be. But this is the MLS description. Like I said, so BizBuySell, BizQuest, you could Google and figure out where you could list your business. I would obviously encourage you to use a broker, but I'm a little biased, but I would certainly encourage you to use a broker. To keep it confidential. It's difficult to manage your business and do something else, period. You've already discovered that with other things in your business, right? When it comes around to taxes or whatever you got to do, right? It's a chore to get to those things. Keeping it confidential is difficult. So you need somebody that can kind of mask those calls, or you're sneaking out to grab a call, and, you know, people will catch on to those kind of things. So that's my pitch for being for using a business broker. We also do things like this for you. So this is the selling memorandum that I put together. This is kind of a smaller one that I did for a customer. Another really neat company. The guy's just retiring, and it's an opportunity for a younger person to come in. Just a really unique business. This is another exciting listing. So I have a confidentiality notice in there to the prospect that I'm giving it to. Before I get to this stage, I've got a pretty good idea of who I'm dealing with. I'm going to know, I'm not going to have Ryan's going to go into pre-qualification in a second, but I'm not going to, have a deep knowledge, but from my banking background, I'm pretty good at vetting people and seeing if they're real. So I'm going to have a good idea if they're real. I'll go into the next step that I kind of take with them. But I really, before I even give them this much information, they've been vetted enough to that someone isn't unintentionally getting your information, and they are signing. They're saying that they're going to keep it confidential. So it's a business description, summary. So some photos. Again, this is a teaser for a buyer. So somebody's out there, they think they're interested. They've got that little summary. They contact me. They've signed the non-disclosure agreement. I'll have a discussion with them after they sign the non-disclosure agreement. I can give them a little more information, and if they're still interested, this is my next step that I'm giving to them to fish online. Let's go. So this is the teaser for that. So I kind of just show them a little bit about the business, a quick tour, a little more detail about the finances, whatever, something about the area. Pretty simple and direct, just like I said, meant to be a marketing hook for them. The non-disclosure agreement. I really could have put that one before that last slide, but I didn't. So this is the non-disclosure agreement that I get from all the buyers. Like I said, I before I did that sim, I would have already had this in hand. They wouldn't have seen that. The non-disclosure agreement, it's saying that they've got a broker, that I'm a broker involved. You could do your own that doesn't have any of that kind of language out there. And I would have an attorney do your non-disclosure for you. You can find them online, but I would get an attorney involved in this period. I'd have your CPA and your attorney, absolutely minimum advisors involved. Hopefully they're going to tell you to use Ryan and I too, but I would absolutely have them involved. It caps that disclosure for 2 years, saying that they can't use it, can't make copies of it, have to destroy it, and you can take them to court. So I flip in and out on a few of these here. Ryan.
Yes, sir. So guys,
yeah,
sorry, go ahead, Bill.
No, okay. So when I'm pre-qualifying a buyer, when I am qualifying a buyer, I have that initial discussion with them before I will take them to see the business. I will get financial statements, or I will get them pre-qualified. The absolute best way is to have a reputable lender like Capital One pre-qualify them. So Ryan and I know that they talk about different advisors, right? So when you're talking to your advisors, ask your advisors about other businesses, other advisors. They're going to know who to use. They're going to know when to use them and what to use them for. So with that, when I get it's a good business, they're wanting to buy a manufacturing company, and it's a $3.6 million manufacturing company, and this guy is all business, and he doesn't want any baloney. He wants to know you're serious about buying his business before he will. I'm going to bring Ryan in. Ryan is going to pre-qualify them and give us a very solid, hey, this guy is good for it. You can trust who he is and what he says, and that he has the capability to buy your business. So Ryan, go ahead.
Yeah, great. Thanks for that, Bill. And folks, look, I think you're hearing a lot about the financial management piece of what all of you need to do in preparation for this, right? And so I'm going to give you a couple different stats. So according to Fundera, they ran a small business survey, and only about 18% of all small business owners have enough working capital to get through a month. All right, that's pretty startling. Then according to SCORE, 82% of small businesses fail due to cash flow problems. So the main thing that you guys need to take away from that is, cash flow is king, right? So you've got to make sure that you have things in order, make sure that you have solid banking and finance partners, and make sure that it's more than just transactional, right? They're not just coming in and saying, hey, I want your loan, give me your loan, right? It's got to be something where they're truly helping you as a small business owner maximize your cash flow. So making sure that you're putting tools in place that will maximize your float time, maximize your payables and receivables float time, and helping you get in your receivables quicker, help you extend out your payables longer, helping you to put in small pieces in place to maximize cash flow float. Maybe nobody ever thinks about this, but maybe putting in, if you can't get a conventional line of credit through a bank, like a traditional line of credit, then maybe you would get a credit card, a business credit card that would help you extend out your float to 30 or 45 days to help you with the timing gap between your payables and receivables. So these are all really important things as your financial management. Because a lot of times we'll have folks come to us and say, well, the building I'm buying, it's only going to be at 50% loan to value. I know the cash flow is not there, but the building's great, right? And that's fantastic. We look at several different things when looking at financing, but the number one thing is always going to be cash flow being king. And so think about these kind of 4 elements, and I would suggest that you write these things down, because these are really important pieces, these next 4 elements of what any banking institution really looks into to ensure that they're putting financing in place or establishing a business, helping a business owner establish ownership in business, are 4 main things. And that's character being one, right? Which is, think about this, like what's an easy way for banks to judge your character? It's credit score, repayment history, time and experience in the industry that they own or in the industry that they're looking to purchase. Those are things that are very important. Cash flow, obviously, as I alluded to prior, I mean, most banks, when they're looking to do financing, they want to see that the ownership, the business cash flow can suffice the debt service, can service the debt on a monthly basis at 1.25 times. So what does that mean? That means that for every dollar of debt service, so loan expense, every dollar of loan expense, that the business owner can service that debt at $1.25 of free cash flow. So after all the expenses are paid, they have $1.25 of free cash flow to service that $1 in debt service for the loan that they're going to be assuming. That's very important. Capital, so cash, right? Capital is cash. So your business cash in the bank. Banks want to see that you have, if you're running a $1 million business, they don't want to see that you maintain an average balance of $20 a month in your business checking account, right? So it's making sure that you have a sufficient amount of capital, and then collateral, right? So banks, in most instances, want to see that you have what they call skin in the game, right? You'll hear skin in the game, and that means you have equity. You've injected equity into the piece of property or the business or the tangible asset that you're buying, that you have skin in the game. And there's different pieces to that, depending on the collateral type, the financing type that we put into place. There's different equity injection requirements, and I'll get into that momentarily. And then making sure that you have the right partners on your side. So you want to have a good CPA, because I know nobody likes to pay taxes, right? But the one thing we can't avoid is death and taxes. So you've got to be able to show that your business is cash flowing, or that you have free cash flow to service debt. If you're showing that you have negative cash flow, you can say, oh, well, I just don't show it all on my tax returns because I don't want to pay taxes. Well, unfortunately, that will hurt you if you're looking to get conventional financing or SBA financing or purchase a business, because even if you were going to buy a business straight out, the business owner would want to know that you can service the debt. Or if you did owner financing, for instance, they want to know that you can service the debt. So if you're showing negative cash flow, that's a very high risk, and more than likely you're not going to get approved by either bank finance or seller financing. Also, making sure that you have a good attorney partner. You want somebody there to review all your documentation. I'm not an attorney. Bill's not an attorney. We want to make sure that you have an attorney there that can review everything for you and be an advocate for you. Make sure that nothing slips through the cracks, right? And then obviously, like I said, a good finance partner or a banking partner that can be a partner, not just throwing you through an 800 number or having you walk into a branch, but someone who is truly your banker. Like if you can't say my banker is Ryan Coughlin, for instance, then you've got an issue. If a branch is your banker, that's not your banker, right? And if an 800 number is your banker, if you have a bank but you don't have a banker, then you don't have a true relationship. So Those are all things that are very, very important. So what do banks look at when they're looking to, or what do they collect, right? When you're looking to do financing. So there's something called the personal financial statement. So this is you personally as a business owner. It shows your assets versus your liabilities, and the banks would normally give you what's called a personal financial statement, a PFS, that you would fill out, and that would again establish your assets versus your liabilities. In most instances, banks are going to want to collect at least 2 years of corporate tax returns, 2 years of personal tax returns. They're going to want to collect usually interim financial statements once we're past Q1. So Q1, January, February, March, right? So once we get into April, most banks are going to see an interim financial statement showing your profit and loss and your balance sheet year to date. And then most banks are going to collect 3 months of bank statements from the incumbent bank. They're going to want to see an accounts receivable aging. So this is the timeline it takes you to receive payment from your vendors or your clients, and then your accounts payable aging. So how long it takes for your payables, your expenses to be paid out. Those are two very important pieces that banks are going to collect as far as the financing. Those are kind of the overlapping pieces that all banks look at. And then most banks will want to see making sure that you can cash flow the expected debt service, as I alluded to, at the 1.25. Again, just to reiterate, for every $1 of debt service, so the amount that your loan is going to cost you on a monthly basis, you want to have free cash flow after expenses of at least $1.25 to service that $1 of debt. So if you're looking to buy a loan, or if you're looking to get a loan, or if you're looking to buy a business in this instance, you're working with Bill and you're looking to acquire one of these businesses, you could probably look at multiple options. And most banks, I'll give you from Capital One's perspective, most banks will want to see that you they'll look at a conventional option, right? So bank balance sheet financing, or they'll want to look at also an SBA option. So SBA, there's several different options you have to purchase a business. There's SBA 7A, there's SBA Express Term Lending, SBA line of credits, SBA Express Term Loans, and SBA Express lines of credit. There's also SBA Trade Finance. So if you're doing things out of one of the ports, like Port of Fort Lauderdale, Port of Miami, Port of Jacksonville, Port of Fort Pierce, there's now an SBA Trade Finance program that you can put into place. But if you're buying a business, a lot of folks are going with an SBA 7A loan. The minimum loan amount through SBA 7A is $150,000, and the maximum loan amount you can get through SBA 7A is $5 million. They can go up to 25 years on a term, fully amortizing, which is fantastic for what your cash flow is for the next 25 years. What your debt service is for the next 25 years. And then they do require on an SBA 7A loan a minimum debt service coverage ratio at that 1.25%, as I alluded to as well. So those are kind of some macro level themes, right? But again, having a good partner in place that can really hold your hand through the process is key, because it is a process, and it can be scary when it's new, right? When you're going into the unknown, or you're going into maybe the pseudo known, right? You're buying a business, historically it's cash flow, or historically it's work. How can you make it work even better, right? This is going to be a lot of people's livelihoods, something they're trying to build their future and build generational wealth with. Well, how can you build with a partner that's going to help you achieve your goals throughout the entire life cycle of the business? Very, very important. So that's my portion so far, Bill. I'll turn it back over to
Excellent.
you.
Perfect. So Ryan said a lot there. One of the things he's talking about is the financials, right? So we talked about the core financials first. So he's talking about the accounts payable report, accounts receivable reports, your financial statements. They're going to have to be completed within 90 days of closing. So if that's not something you typically do as an owner, as a business owner, and you're going into the sale process, you should be setting yourself up to where you can quickly get a financial statement generated to be able to give to the bank, that you can quickly generate payable reports or whatever information it is that they're looking for. Related to that, he was talking about forecasting and looking for, it's having those finances. What business owners frequently don't do, not only do they you could update frequently, Some people do, many people do, especially with QuickBooks. More and more people are. With QuickBooks, it makes it very, very simple to pull out monthly financial statements and to look at them. Before QuickBooks existed, it was a lot harder. People still do not look at them monthly. I had a boss one time, a banker boss, and every day, every morning, his report, it was on his sheet. He wanted to see how deposits were growing, loans. It was there, right? It was a daily thing that he looked at. Look at it at least monthly, your historical information, so you know where you are currently. Forecast, figure out how to do a 13-week cash flow forecast. Figure out how to look forward, because everybody, you're looking in the rear view mirror. If you can start forecasting forward for a quarter, you're going to do yourself some huge favors. You're not going to be guessing about how to grow. You're going to be able to grow. So that was just kind of a bonus in there. That's not about selling, but that's just a little extra spiff for you. So thank you, Ryan, very, very much. That was excellent. Next, negotiating and structuring the deal. So in this, so what Ryan was also saying in there was SBA financing. SBA making a business eligible for financing increases your pool of buyers, and it's going to increase that multiple at the end. So when I'm looking at businesses, that's one of the reasons why I'm attracted to these manufacturing businesses and stuff, because of my background and my experience with lending. It just makes me a natural that I want to make sure that these businesses are financeable so that I have the greatest market for them. Think about that as you're approaching it, as you're approaching the sale. One of the things on the planning front, many business owners do at least do this. They frequently will purchase a building, occupy the building, buy their business, have it in two separate entities, and then you get options when it goes to the sale. You can sell all of it. You know, sometimes buyers are trying to limit their investment. You know, they have $500,000 and they can leverage that up to $1.5 million, right? So the business is $1.5 million, and there's another $1 million worth of real estate. I can't afford the real estate. I'm going to want to work out an option for you. It's great for tax reasons. There's a lot of reasons to do structuring like that. So I would strongly encourage you to, if you have an option to buy your own building, be in a position to separate it. Then I'm doing two agreements like this. I'm doing a real estate sale agreement and the business asset purchase. This is just the business asset purchase agreement that I've got kind of for you here. We're running out of time and I want to get to questions. So we're going to go pretty quickly through it, but you can just simply see it's got the purchase price, down payment. What I want to talk to you about is dates, right? So with Ryan, I'll tell you, I have 90 days in this deal. Getting a deal done in 90 days is tight. You're going to want 90, 120 days. You're going to want to know that up front. And I'll show you that actually at the end of the presentation a little bit too. Just kind of goes into details. Frequently I will use, instead of it as the bank competition, right? I'll use a seller. Many sellers that they own the businesses free and clear, own the buildings free and clear, and they can be the bank. So there's tax advantages to that. There's qualifying advantages. You have to be very, very comfortable, and you need somebody like me on the other side of it, or an attorney. You really need to know what you're doing when you do that. But that is definitely a viable option for many business sellers, and it opens up that door to, you know, hey, this is something a bank won't quite do, but I can do it myself, and I can get a great rate that I can't get. So there are options there. Accounts receivable, I do not want to dig into too much here. There's just different things. Sometimes we take it out. Different deals are, every transaction is a little bit different. This is meant to be a simple transaction. That's the main thing I wanted to show you here. Is a lot of people will do LOIs and they pass them back and forth. I will do that, but I try to do that as little as possible. If you're a seller, you want to get somebody on the hook. Like I said, time kills deals. And if you're passing around an LOI, you're killing time and you're killing your deal. So if you can avoid that, avoid it. We are almost done closing the sale, right? Final due diligence, inventory, working capital was kind of some of the things that I skipped over quickly on that statement. If you do have real estate, you got to make sure title work. There's valuations and things that have to be done. One of the questions I think I saw in there was a valuation question that I peeked at. So we will get to those shortly. Settlement statement, have attorney close. It's vacation time. That's the everybody. People they usually buy the car first. They buy the toy first, but they're buying a toy. They get to go on vacation. They get to relax. They get to spend time with the grandkids, and it is a life-changing experience. I think I have one more slide left. Time to close, or two more slides left. So this is I wanted to set realistic expectations for you, right? So this is, again, by deal size, by number of months that it takes to close, months from engagement to close, right? So that's the month from when I've actually listed it to the closing time. You can see it's 7 months, gets up into the bigger months. Due diligence gets harder. They take longer. They do things called quality earnings reports and things, extra additional due diligence that just takes time. Months from LOI to close. So this would be from the time you've got a buyer to the closing. And that's what I wanted to point out to you here. So the 90 days that I had in that contract, it's tight. You really got to be working at it. You have to have good partners. People have to know what they're doing to really be able to get you there. So the 2 months down the bottom end, those are cash deals. That's what's bringing that down. So our contact information is here. I will forward this slide deck to Tegan, and she can, if she wants to, share it with all of you. I think she's sharing a link. So
Bill's
hopefully she
mine's
can-
786. It showed 768. 786 is my area code.
I apologize.
No, it's all good.
That was the last slide. I was done. There was no error checking there, I guess. So it's 786 is your area code.
Yeah, I can throw it in the chat too, so they have
Perfect.
it. It's 786-868-5185. And again, I've got bankers all over the state. They can pull up quickly even for a Zoom. If someone wants to do a quick Zoom or a phone call, quick 10, 15 minutes, and we can get you moving through the flow of things. So
Excellent. So Tegan, do we have questions? I'm gonna put my phone number in the chat
Yes,
too while you're
wonderful.
doing that.
Thank you. First of all, thank you guys while you're doing that, Bill, so much for this presentation. Wonderful. We do have a number of questions. So, and I know we've touched on some of them. So if I'll just start from the top. I think that's the best. This question, the website Biz Buy Sell. Do a lot of businesses get listed on that website? And is it a good option?
Yes, we use it. We subscribe to it. It's definitely a good option. Everyone can list on there, so you got to you have to churn through it. But yeah, no, absolutely. That's one of our subscriptions that we maintain. We've got 6 or 8 different subscriptions that we maintain, and that would be probably Biz Buy Sell. You said
Biz Buy Sell.
that'd be the top one.
Okay, wonderful. All right, this one, oops, I'm just moving. And you did go further into depth in this, but for poor financial records, does that mean poor financial records concerning revenue and expenses?
Yes, all the above. Taxes, so financial statements, tax returns. The bank, when they go, so they're going to want to see your tax returns for the last 3 years, and they're going to want matching financial statements. They need to match up. And then, like you said, the interim financial statements, if it's been more than 90 days past the calendar year, which most of the time it is, right? So you need those interim financial statements. And again, it's the income, the expenses, and the assets and liabilities.
Okay. All right, and there's a couple right here. First one, how can you sell your business and not have your employees and customers know it?
Carefully. And they tend to, the further you go along, like I said, they find out at times. Depends on the business. There's restaurants and things like that tend to, there's a lot of gossip in those kind of communities. So they frequently find out. A lot of times I even see them just listed with the names, a manufacturer. Like I said, I do the anonymous. It would be getting a business broker. If you're trying to do it yourself, you're doing it or not. So you go to BizQuest or Biz Buy Sell. Sorry, BizQuest is, you go to Biz Buy Sell. You'd post it anonymously, how I showed the example of the welding company, right, where you're not listing your name. You might get a dummy phone or something, a burner phone, that you can put that phone number in there so they can't match you up if they Googled it to your phone number, those kind of things. Like I said, a business broker puts that intermediary in there, so it's much more difficult. But I get calls and or a cryptic message, whatever, and all I have to do is Google the phone number. It's their cell phone, and it's going to have their name, and I know exactly who's calling me, right? So a little bit of masking to do goes a long way. Everything you do, you try and do it anonymously, but you're going to have that communication. You're going to be with that buyer. The most difficult is when you're in one of these Main Street businesses. It's a daycare, a restaurant, or whatever, and and people just, they talk. So that's the,
Okay,
what is
and
our
then-
next?
Hey,
Yep.
Tegan, you missed the appraisal question too. There was a question on appraisal
Oh,
and
yep,
that really
sorry.
can range. Yeah, that can really range. And just FYI, if you're going to do bank finance, you've got to be know that banks are required to order their own appraisal certified to them, to that institution. So, obviously, look, if you're going to do seller financing or maybe you're going to buy it in cash, you can order your own appraisal, obviously working with Bill, you can get evaluations, things like that. But when you're ordering an appraisal on a building, those costs can change. It depends. It really depends on the scope of the appraisal. So I don't want to give you a total cost, but look, they can range anywhere from $1,200 to thousands of dollars, depending on the scope of the project that you're buying, if it's real estate related. And then when it comes to valuation, I'll leave that one to Bill.
Yeah, I'd say $2,500 to $5,000 would be pretty good on any of them. Would be a good number. If you have real estate and you have a business, you're going to have two valuations most likely. So you might want to double the number.
Okay. All right. And then, so what about using IRAs to buy a business?
Yes, you can use IRAs. You have to go through special. There are companies that you can go through to, and I do not claim to even I mix up the terms. The benefit retention, pension plans, those kind of things. So I believe IRA is the one that you can use. There are retirement type accounts that you can use, some of the SEP accounts and the different retirement accounts that you can use. My brother actually purchased his business, and part of his purchase came out of a pension that he'd had. He'd been with a Fortune 500 company for many years and left it in that retirement type asset, but was able to borrow from it and utilize it to purchase the business.
Yeah, there's something called self-directed IRAs, and you can work with, as Bill alluded to, a self-directed IRA company. We have one of the largest ones is out of Miami-Dade, actually. And so you work with these self-directed IRA companies, and they'll show you how to set up a self-directed IRA, so you can do just that. You can utilize it to purchase a business.
Okay. Thank you. How about selling to employees?
Yes. Yeah, that's a lot of what I do. So I have the West Advisory and that exit planning. So there's two kinds of businesses, right? There's those with an exit strategy and without an exit strategy, right? You thought you'd sell it to the kids and they weren't interested, or you just never had one, are the ones that we're really talking about selling here. I work with a lot of businesses that I've worked with a multi-location business that he had it set up right. He'd incorporated separately at the different locations. There was enough of a difference, and I was able to put one of his senior people to do. We did like a little mini buyout of a portion of his operation that just made a lot of sense for everybody. I work with families where I work with a family. Mom is just incredibly successful, has built and sold multiple businesses over the years, but she's mom, right? She's grandmom, and so she has heirs, right? So how do you transfer that business into one heir? It's the things you have to work through, but yeah, absolutely, you can guide that. Whether it's an employee, whether it's a family member, there are businesses that do have succession planning options, and you need to work through and execute on those. Every business and every transaction is different. That's one of the neat things about this business.
Okay. And what % of businesses are financed by the seller?
As few as possible. That would be so you want to limit that exposure. There's times where it's beneficial or it's necessary, and you put everything correctly. I see. Wow. So I don't do a lot of restaurants, but in that range on those Main Street businesses, there's a lot more seller financing. In my range, it tends to be, it's a seller note or something that you're holding to try and get the debt service coverage right, or make the bank happy, or it's a small amount, if anything at all. I prefer for it to be a clean deal. I've had where some banks like for the seller to be in and some don't. I would prefer that they just it's as clean as possible, unless there's a real reason for, and you're very, very comfortable with the deal. So is it 50% in those small transactions? Maybe it's minimal. Once you get above probably $300,000, it starts dwindling down pretty rapidly.
And this one, most of the business broker's income comes after the sale, and you don't have enough money to market the business. How do you deal with that problem?
Okay, I'm trying to, most of the business, I invest a lot in my time and my money. And so we have these subscriptions, and that's, it's a forward investment, right? That's the bottom line to it, that you're really putting your, I work with people that I like to work with, that I'm comfortable with, because you're investing a lot into them, and you have to have confidence in them. So, but yeah, you're absolutely, I'm doing all my marketing. I'm doing, it's, these businesses are busy, right? During the day, you have employees during the day, you're trying to do a confidential sale. So I'm setting up a showing at night on a Saturday. There's a lot that goes into a lot of investment into these businesses.
Okay. And do you guys have time? We have 5 more questions. I know we're reaching 1. Do you have a couple minutes after 1? Otherwise, I'll jump.
I'm good.
Okay.
Barely. So let's,
All right, let's go then.
Yes.
All right. So what is the unique value proposition for Capital One?
Yeah, sure. So I think it's pretty simple, right? We're changing banking for good. The banking has changed tremendously in the 20 years I've been doing it. And when I first got in, everyone was known as a lender, right? That was your title. You're a lender, you're a lender. Well, lending is just a commodity, right? It's just a piece of the business. I think now banks have to be a lot more than just, or bankers have to be a lot more than just lenders. You truly have to be an advisor. Our model at Capital One is different. We don't put a branch on every single corner in Florida. We have a cafe-based approach. We invest highly in our technology and highly in our people. We bring in the best people, because essentially we bring the bank to you at Capital One. Like I said, my bankers can pull up with you in same day, right? We have a same day service level agreement with all of our clients and prospects. We'll get to you same day, email, text, phone call, pull up on a quick Zoom if we have to. We will come to your place of business. We're there for you. It's a different model. Like I said, we don't want you calling the 800 number or walking to a branch. The branch thing is changing. I mean, if you go into a branch, I suggest go try 3. Walk into, as an example, try 3 branches, any bank, there'd be community bank, large bank. Walk in, it's probably empty except for the people that are working there, because banking has changed, especially since COVID. So we've really been able to be effective because of our high investment in technology. But again, simply put, we're changing banking for good. We'll show you what we can do.
All right, thanks, Ryan. Okay,
True.
so this one, let's go. Are there any rules of thumb regarding valuations of a business based on multiples of profit instead of gross revenue?
It would be by industry is what you're talking about. So certain industries have rules of thumb. Frequently those rules of thumb, when you play around with them, they come back into they'll match up to the multiple of revenue model. There's many ways to value a business, and when you're doing these business valuations, there's multiple approaches. You're discounted future value. You're looking at the income. You're looking at the assets. You're looking at it from a lot of different ways. Usually they kind of circle back. Some industries, insurance. You're mentioning engineering here. It would really be a multiple of the seller's discretionary earnings. So there's EBITDA that I mentioned earlier. Seller's discretionary earnings, typically in the below $5 million price range, it's going to be a multiple of seller's discretionary earnings. You get above that 5 million, that's when it's going to go to the EBITDA, a multiple of EBITDA. Certain industries like an insurance company, like a lawn sales business, where it's a premium, but it's determined on there's somebody that's important to that business, and you're not sure if it's going to continue on with you or not. Then it's a multiple of revenue, because you're looking at, okay, I've got that 1 year of revenue or whatever that net is. And there's different industries there. There's I looked at it was a container business, one of like these storage containers, like behind Walmart, kind of thing. And it was simply you count the containers times 2,000. And that was your business. And then you did that number, and you'd come out with the same if you were doing the cash flow analysis. So a lot of times they do correlate back, but there's definitely different industries that have their favored way of valuing a business. If you're in those, the best way to know that is in those industries, go to trade associations. Those other business owners they're freely going to tell you. It's going to be common knowledge. I sold my business. I sold this business. This was what I did. This is how it sold. This is how it was priced.
Okay, and I'm just going to jump really quickly because you mentioned the EBITDA.
Mhm.
And then I'll come back to that one. So someone did ask how to calculate the EBITDA multiplier.
So like I said, that comes out of my database so that I know what the multiplier is. So that's really, it's 20,000 companies that are in that database, 19,600 companies that are in that database that I mine by size and by industry and then by performance to really get down to that, whether it's the EBITDA or seller discretionary earnings or whatever multiple.
Okay, perfect, thanks. And then bumping back, got two more questions. Can you describe some typical conditions of sale? For example, owner must stay on board 3 years, a non-compete
Oh, yeah.
agreement.
Yes, both are, that's standard in that you just fill in the blanks in the contract, right? So that's the, yeah, you're going to want, the bank may require a certain amount of time. They're going to require, of a borrower, and this isn't really a condition of the contract, but there might be licensing, right? If there's an electrician or something, you might have to have a special license. Other conditions, I mean, working capital is always a big one. Inventory, I structure most of my sales as an asset purchase so that the bank is for the bank and the borrower providing the working capital. It's an asset sale. It's a clean sale. The liabilities, it's a much better way to sell a business, much better way to buy a business.
Okay, so who can you use to sell this is the last question. Who can you use to sell a very small business?
How small? So there's definitely brokers that specialize in those. There's these niches. That's why in our office, we have several people there. There's even if we work on the same kinds of businesses, we have our own kind of individual niches, whether it's, I like the manufacturing kind of companies. Some business brokers will absolutely do it all. They'll do a restaurant, a manufacturing company, or whatever, doesn't matter to them. Some specialize in restaurants and they tend to be a certain size, right? You might get a bigger one, but most of them are going to be under $500,000. So, there's brokers that specialize by both size and by business. If you're in that $150,000, $200,000, that's where a broker would get interested in helping you out. Below that, it's going to be tough to find. Tough to find a broker. You're going to wind up selling it yourself.
Okay, thank you. And thank you guys. Thank you everyone for your questions. I'll send, if anyone has any follow-up questions, I'll send the slide deck which has your contact information. Along with a recording of today's presentation. So thank you guys so much. We're actually going to have Bill and Ryan back in the future for how to buy a business. So if you're a serial entrepreneur looking to sell yours and then buy another, please join back. But thank you guys again so much. It was wonderful having you on, and have a wonderful day, everybody.
Excellent. Thank you all. Great to see you, Ryan. Thanks, Tegan.